Good morning, everyone. Brian Hoops here, Midwest Market Solutions. This is Market Insider TV. This is our opening commentary. It's Monday morning. It's August the 11th. Hope you had a wonderful weekend and are looking forward to today's trade. A lot of news late Sunday night, about 10:30, 11 o'clock, something like that. President Trump kind of blew up the grain markets with a tweet, and we've held on to most of the gains in the overnight session. Looking at the grains, first of all, corn's up penny and a half, but look at beans, up 16 and 3/4, meal's up a couple dollars, bean oil higher, and the wheat just fractional trade activity and actually mixed here with Chicago up a half, Kansas City down 2 1/4. The outside markets have natural gas unchanged, crude oil just slightly higher, stock market slightly higher, but big drop in gold and silver. That's some huge moves. 2.5% in gold and about 2% in silver. U.S. dollar index is up a little firmer here this morning. We'll talk more about what happened with his Truth Social account, formerly Twitter. We'll talk more about that here in just a second as we get into our overnight markets. But it's going to be a busy week as we have export inspections this morning. We have crop progress this afternoon. Tomorrow, CPI and supply and demand reports out at 11. PPI on Thursday of this week. NOPA crush on Friday of this week. So it looks to be a very active, busy week and very hot in the plains areas. Southern Plains will get a kind of a ridge that's going to build over parts of Missouri and the Southern Plains, and that's going to be very hot conditions for some of the crops there. So important that they get some rains. We did receive some rain in the overnight market here in Springfield. So 6-10 day, 8 to 14 day, look for above normal temps and above normal precip. That's a bearish forecast. Hot and wet is going to be bearish for corn and soybeans and pod fill and ear fill, just moving out in that 8 to 14 day time frame through middle of August into the end, almost the end of August. We're really running out of a growing season here. Just very little time for any type of a major weather move. Now, probably the biggest news coming out overnight is China's facing August 12th tariff truce deadline here. And and an extension, if they would have one, opens the door for another 60 to 90 days of 10% tariffs and access to U.S. ag products. Now, President Trump tweeted last night that China's worried about its shortage of soybeans. And he hopes that our farmers would be able to fill some of this void, that China would quickly quadruple its soybean orders. That's his hope anyway. And he has made some tweets before about how it was a great time to buy stocks right before the stock market took off and rallied. And I think the algo traders took this as a sign to step in and be buyers of that soy market. So that comes, his tweet very timely, just ahead of the extension deadline on the 12th, which is tomorrow. We'll see if anything happens with that. There was some selling that came in at much higher prices, but beans holding those gains for several hours here into the morning hours. We'll see if we can follow through with that to the upside, or if there's just more of a headline-driven spike in the markets last night. Supply and demand report does come out tomorrow morning, 11 o'clock Central Time. Average trade guess for corn yields, 184.3 bushels per acre. That's up 3.3 from last month. Production of nearly 16 billion bushels and ending stocks of 1.918 billion. Soybean yields, 53, up a half a bushel from last month with production around 4.374 and ending stocks 358, up from 310 a month ago. Wheat production and ending stocks down slightly from last month. Now, in the last 12 years, corn yields have increased 7 times and decreased 5 in this report. Soybean yields have gone up 8 times and down 3 and held steady just once. So the odds are for an increase in yields for corn and for soybeans. I think the question is, more so if we're going to have a yield increase, is how much will the USDA adjust it in the case of corn. They may not do anything in soybeans because of the growing season and the timing, but they certainly would be justified, I think, in doing so because of pretty good yield ratings for both. So big moves in the livestock on Friday. We were noting last week a lot of the red flags, warning flags about we were on par with the index. In fact, we went to a premium above the index. In the feeder case, the feeder cattle, we were on par with the cash trade in the August live cattle contract. We were $9, $10, $11 premium feeder cattle over the index. That's bearish usually. We noted open interest levels last week during the sharp rally had actually gone down. That's not an indication of new buying coming in the market. That's an indication of positions being closed out, probably shorts getting blown out of the market. So there were some warning flags that we would trade lower, and we certainly did. Cash came in at a disappointment last week, a couple dollars steady to a couple dollars softer. And we have expanded limits today, 1075 for live cattle, 1375 for feeders. I don't expect we'll test those limits. Now, we look at bid-ask early this morning. We're not seeing a lot of selling come into the marketplace yet in either live or feeder cattle. I think we could open a little bit softer on some follow through, but now that we've lined ourselves back up with the index and with the cash trade, I don't think we're going to see heavy selling into these markets in here. In fact, we may start to see some buying interest in that August contract if it gets to discount to last week's cash trade. Have a great day, everyone, and good luck. I'll be on RFD TV talking about the markets this morning. Hope you have a chance to tune in. Check that out. This has been Brian Hoops for Midwest Markets.